Rob,
Hey,
talk to us about some of the areas, perhaps geo-specific, perhaps industry-specific, of the things that BV Capital is really interested in. Then perhaps conversely, what are you not interested in? Perhaps there's, areas that you guys might think that might be a crowded trade.
Sure. We are still incredibly bullish on multifamily. Let me give you guys a statistic and tell you why. So in 2018, the average cost to rent a place, just average, was roughly $1,200. In 2018, the average cost to own a house of similar means of what you could qualify for was $1,200. They were identical. They were the same. Today, that same rent is $1,350, but that same cost to own is $1,800. And that's why, back to that post we were talking about earlier, you're going to see massive rent increase to catch up. The equilibrium is where it should be. And what happened was, when the cost to own is so high, people can't buy, they can't finance, they're going to stay in the apartments, and landlords are going to continue to raise rents. We've raised rents 5 times this year. And so you're going to see that continue, because we don't think that asset values are going to come down in the housing market because of what we just talked about. So rents will have to come up to meet them. Well, that means it's a great time to own rental property, whether it's individual or multi. And so being a developer of multi, we're very bullish on that.
Yeah, Rob, let me ask you a question. Not related to multi so much. I mean, it is, I guess, in the byproduct of it, but I have a theory that as builders pull back on the supply in their building, and as we come out of this, who knows, 2024, we're going to be in a worse spot from supply than we were going into it pre-March, pre-February. What is your take on future supply in the market?
I think you're right. Yeah, I mean, look what happened in COVID. We quit building stuff, and then that ended on a dime, it felt like, and everybody wanted to rush back in with this massive inflation for all these reasons we don't need to get into, and we didn't have the supply. We didn't have the product. Well, what's going to happen? The Fed raises rates, what they're doing. All the builders say, oh, we got to put that on hold, right? All of our friends in the mortgage business are getting laid off, unfortunately, and all that business is just drying up, right? The people are still here. They still want to buy the home. So when rates come back down, they're going to be flooding the housing market, and there's not going to be a lot of supply. And so you do have this exact risk, Tom, that you're talking about, right? It's just simple supply and demand.
Yep.
That's assuming that our economy is where it is today, and the consumer side of the balance sheet looks as good as it does right now, because
Correct.
Things can quickly change. So, that you bring up a great point. I mean, I definitely love the multifamily space when you see the difference of what it costs to own the very same unit or home as it is to rent. And so that equilibrium, it may not go up to the 1,800 that you say, maybe it does, but maybe it finds a middle somewhere there with the amount of supply. I don't know. I'm not smart enough.
Yeah, and Mitch, I do think prices could come down a little, but nothing like what we saw last time around. Last time around, they came down in some, 25% on average. Some markets a lot worse. Do we pull back 3 to 5%? Sure, that would be healthy. Is it going to do what it happened last time? Absolutely not, for all the reasons we just talked about. But they've got to get closer to an equilibrium point.
Yeah,
so how long does that take?
Yeah, sorry, Mitch. I was going to say Poison Ivy, or Ivy Zellman, as she's known. She came out and said, year over year, 3 to 5% price reductions. So that's a total of 8 to 10% over the next 2 years. So,
is that Austin or is that national?
National. So yeah, it's obviously sub-market, right? But
it's coast. Your hotter markets, like where you guys are in Austin, you may see a little bit more of it. The more run up, the more run down. We saw that in California last time around. But also, guys, the other thing is, keep in mind that we always play in, everything we do is in Texas. I know that that's true for you guys for the most part too. And the massive in-migration we are still happening is not going to stop. In fact, this may even make it worse as far as just the amount of people moving here. A company can move here overnight and they save 8% right off the top, depending on where they're coming from, right? That's not stopping. Not to mention the oil and gas business has done exceptionally well because of the price of oil. That does affect a lot here in Texas. So there's a lot of things happening that here we're not going to see. And I'll give you another thing. On the multi side, buying now may not be the best times. That's why I mentioned earlier, if you already own, that's one thing. So we have, Mitch, you asked me, what have we done? We pivoted almost exclusively to construction because the margins are so strong in construction that even with the higher debt cost, you could still make a ton of money for investors, and you're still fulfilling a massive need out there and delivering brand new product in the right markets. And so you asked what, before we got on this podcast, you said, what are we doing? That's what we're doing. We've almost shifted exclusively to construction, to ground up, and just supplying that need that's out there.
This is what I've been saying forever. How else do you either build an incredible buffer against a downturn by building yourself, right? If you're a single family developer, or even, a homeowner who wants to get access and raise a family. There's no other better buffer against a down market or paying less than retail than building a home yourself. Now, you're going to have some challenges, a lot of headaches. You may start to lose your hair. I mean, there's a lot of negative things that do come along with building a home. However, financially, it makes a lot of sense. And a lot of people don't understand that the economics of building a home, it's not as rich or as costly as you would think. There are a few lenders out there who will lend on what's called a loan to value. So they'll actually take your appraised value of your completed home based on comps, which right now they're all lagging. So you're looking at, better numbers. So you take that, factor that into your cost of build. And I think you ultimately, that translates into the market that you play in. So you're building out there specifically multifamily. 12 months ago, you did a student housing deal with TCU and University of Texas, Arlington. And I absolutely love that deal. I love the student housing deal. Anything else like that you guys are looking at, and, or other spaces that are kind of multifamily, perhaps just labeled a bit differently?
Well, we are about to do a multifamily near another university. What's interesting, and this is all local, so depending on who's watching this and where they live. So in the state of Texas, UT and A&M are full, right? They cannot even admit more to their main campuses, let alone you got to be in the top like 6 or 7% of your class to get in. And so what's happening is everything else is where the student populations are going. And so what's also interesting is those two schools, satellite campuses, are where they're having their students go to. If you look at both UT and A&M satellite campuses, they're exploding. And so we're about to do a ground up multi next to Texas A&M Corpus Christi. Since you brought up student housing, there's 12,000 kids there, and they're trying to grow that campus to 20. So not a big market, but once again, it goes into that whole idea that they don't have the housing, but yet they're going to bring all these kids in. Where are they going to stay? And a lot of times they're going to these satellite campuses with the goal of moving to the main campus, and they never do. It's really interesting. So our UT Arlington property is a similar example of that. It's really fascinating what we've been able to see there. So you're going to continue to see the constraints at the college level, because it's just housing overall, whether it's single family, whether it's student, whether it's multi, whether it's senior living, we are underhoused. So you pick your poison.